Welcome back everyone to another market review for E-mini NASDAQ, and today is going to be September 20th, Friday. And as you guys know, today is triple witching or OPEX, and simply that means that the futures, the index options, as well as the regular stock options all expire today. I believe it's every quarter on the third Friday of that particular month, and that's why you want to be careful on these days. ICT also talks about how on days like these, it's better to just skip them or really engage with low risk or just paper trade it. And I'm going to show you guys here on the 1 minute as to why it was just better to stick out of the market and not really engage in any of this price action. So here we are on the daily chart for NASDAQ. And the only levels that I was looking for in terms of the daily chart was I had this new day opening gap right here. This new day opening gap, I'm going to show you guys why this was a possible target. And I have a new week opening gap. If you go to your weekly chart, if you take the close right here in the open, that's your new week opening gap. You draw that out, and I'm going to show you guys how price perfectly reacts to that, especially if you guys trade on the lower time frames. It's better if you guys utilize the new week opening gaps and the new day opening gaps. Now here we are on the 1 hour chart, and today I was really looking to be short as we were above the minute opening price. And look at the interaction we had with that new day opening gap. And something else to note is look at this low resistance liquidity environment. Price just went up here with almost no pullbacks and leaving gaps behind. So really what that tells me is that this decline is going to be with a lot of speed, especially if it's within those ICT silver bullet hours. And look at how price is reacting to that new week, new day opening gap. Perfectly respecting that. Look at the wicks and the bodies as well. Well in line with that analysis, looking to go short. And here on the 15-minute chart, I had these equal highs up here. That's why I said buy stops taken, as during that 9:30 a.m. open, we trade up, taking out all these people here trying to chase this going long, but also anyone here trying to go short. So we go lower, and almost in the form of a Judas swing where you go lower, higher, taking out sell stops and buy stops. And look at how price reacts to that new week opening gap. So again, if you guys are not using the new week and new day opening gap, I highly recommend you guys start using it. Especially for anyone trading on those lower time frames. It's going to help give you a better edge when you're trading in the markets. And here we are on the 1 minute chart. And remember what I told you guys, where again, OPEX days, like if you look at all this price action here, it's just all consolidation. Right here is that 950 macro, pretty much right here, as you can see. And we sort of had some sort of clean price action, but again, it wasn't the greatest. All this chop around, you don't want to be in any of that. It's better to just sit out and, really wait for a better day. Just wait for Tuesday or Monday night, depending on which type of session you trade. But this was all consolidation. But we finally here, we break out because of the breaker. Here we have a high, low, higher high, lower low. We respect the consequent encroachment of that bearish breaker. And then leading up to that ICT silver bullet model, as we can see here, this is going to be that volume imbalance here. We trade lower, trading back up into this blue level. Remember, that's our new week opening gap. Price sort of escapes it a little bit, and then we finally begin to trade lower. And once again, so this is what I was talking about before with what we had up there, consolidation once more. So again, all this consolidation, you don't want to be in any of this price action. It's not really going to be suitable. We just chop around practically leading up to the macro, as the macro is going to be right here. But looking at this a little further, just before the macro, we have this small fair value gap. We trade up into this and the inverted fair value gap. And something I want you guys to note is look at how these candles here respect the consequent encroachment of this inverted fair value gap, especially the bodies. That's what you want to see. We also left these equal lows down here with this low here, this low, and this low. So if really all this is telling me is that retail has their stop losses below these lows. And then we also have that larger time frame sell side liquidity that we marked out. We then have a bearish order block right here. We trade up into this, displace lower, leaving this open as a breakaway gap. If you're bearish, you want to see this stay open. Remember that. We trade lower once more, fair value gap in here. Again, look at how the bodies are respecting the mean threshold of this fair value gap here. We then trade lower, order block here, trade up into this, go lower once more, trade up into this one more time. Look at the time also. Right on this candle is the close of the macro. So you can expect to see movement either during or at the closes of these specific macros. And again, look at all the volume we have right at the consequent encroachment of this up wick here. So I'm using this wick as a fair value gap in this case. Like I always say, you guys can definitely utilize those when necessary. But again, it has to be able to frame with your setup properly regarding the actual delivery of price as well. And then we see price trade back lower to the new day opening gap that we marked out earlier. And then we see price trade back up. So here we are on the daily chart for dollar index. I was looking to be bullish on dollar. and I'm going to show you guys why, specific on the lower time frames. But in terms of the daily levels that we had, we already took the daily sell side liquidity from here. We have this new day opening gap and this one right here, as we can see there. And I was mainly looking to see if we want to trade up back into this, which we actually do. We tap right into the high of it right there, and then price rejects off it. And here we're on the 15-minute chart, and what I was really looking for is these equal highs up here being my main draw, but it looks like we fell short of it. We see price, these are equal lows. Price is going to take sell stops below these lows. We displace up higher. We have this fair value gap right in here. We see price trade into this for a deep discount. We trade up higher, and this is during that ICT silver bullet session. We have a fair value gap with a breaker. As you have a low, high, lower low, higher high, and you coupling that with the fair value gap. So that's that multi PD array analysis, leaving this open as a breakaway gap. And then we trade up higher, tapping into that new day opening gap. So again, I always say utilize those new day and new week opening gaps, because right here, you're utilizing both the new day opening gap and this fair value gap, but also up here, you're using it as well as a potential exit point, because that can be acting as resistance. So that was today's market review. I hope you guys enjoyed this video and found it insightful. Please be sure to comment down below, like and subscribe, and I'll catch you guys in the next market review. Peace.